All right, welcome back to advanced trading. Just wanted to show you here, I've entered into a trade and I entered it for an expiration for tomorrow. And I'm down a little bit thus far on the trade. So we got filled today. I entered into a 39.60, 39.55 bull put spread. I cost averaged in, so the first six I sold for $1, and then I sold the next four for $2. And right now, that contract to buy back is worth 235. See, I've got an order to close to buy back at 5 cents, and that's at a good till cancel, so that'll stay on till for today and tomorrow. So right now I'm down on this trade. Um, these are some trades that I put on the other day. As long as the SPX closes above 39.95 tomorrow on Friday on expiration, then these will expire worthless, or I'll buy them back at 5 cents and close up and be in cash for those trades. Right now, you can see the PL day and PL open is going all over the place. It's because it's really volatile right now. The market is dropping significantly. So here's some live action stuff. This is how I trade now. As you can see, it can be very um, if you don't have experience trading the market, it can be very emotional to trade this kind of market because you are risking. If you want to make a lot of capital, you need to risk a lot of capital. So that's why I like to trade these smaller trades. However, I'm also trading just to live, right? So I'm putting more risk into it because I'm going for a higher reward. That is also, you know, the market can do anything. So if you don't know how to correct trades and you don't know how to do all those kind of things, you can end up pretty much hurting yourself. Okay. So let's see here. We were advancing. Now the decliners are up. So something happened in the day where we had a switch up. But right now it's not that much of a difference. There's a lot more declining than advancing. Maybe 150 more, give or take. Volume, there's more volume declining, and there's more capital declining right now. So in the morning we had a nice pump. This is from open. You can see here we have an ascending triangle. I can draw that in. So an ascending triangle is a trend continuation pattern. That means if we're in an uptrend and you see an ascending triangle forming, the likeliness of it having a breakout and continuing upwards right here. So from here to here and from there to there, forming a ascending triangle, which means there's similar resistance and a higher support, and then it broke through and it made the same move up. And here we're looking at all of our indicators, and you can see that they were an uptrend in the morning, and it was also an uptrend in the morning. And then as we started having, this could almost be a weird head and shoulders, which is a trend reversal pattern here as well. Call that a head and shoulders trend reversal. And now we've switched into a intermediate short-term downtrend. And I entered my trades, the first set here looking like a bounce, but the indicators weren't strong, so I shouldn't have entered that trade. See, these are having lower lows and lower highs. So I didn't really have a clear entry, but I wanted it and I went for it, it's not a good way to trade. So you can see now, earlier in the day, up here, I was having positive on all of our trades, looking great. Now things have pulled back, and we're going to show losses that are unrealized losses. unrealized losses because nothing expires today. But this is definitely not what I want to be seeing for trades that I have expiring tomorrow. So I'm going to have to do some monitoring and make sure that I don't end up getting my ass handed to me. Because that's the one thing about if you start over trading and over leveraging, it's very easy to get hurt. And you can see I've got a lot of trades on right now. Got too many trades on. Too many trades. That's for sure. Too many trades and over leverage, and this is too much risk. So here's a good example for advanced is how to not trade is do not get crazy over leveraged and putting a whole bunch of trades on the table because you need to make a bunch of money because that's what you want to do. Okay, that's and again, I'm not saying I'm going to lose all these trades. This is not my I'm not sitting here scared. I'm sitting here going reflecting on how over leveraged I am for my positions and going, hey, if I'm sitting here teaching people how to trade, I need to also show you what not to do because you're gonna learn it yourself. If you don't learn it from me, you're gonna learn it the hard way. And the hard way hurts, but you know what? The hard way hurts many, many times till it beats it into your head. Look at me 6 years in talking about, oh, I think I have too many trades on the table. Yeah, maybe you should take some of those trades off the table. See these? This is next week. This is the end of the month. Lots of time left on these trades. Got a week left on these trades. All these trades expire tomorrow. Right now, we're above. We're out of the money here. What's the stock at? What's the stock at right now? 39.61. So we're so you want all these contracts to expire out of the money, right? Out of the money. 39.30, 39. We're out of the money. We're out of the money. We're in the money. We're in the money. So this is the only one thus far where we're not out of the money yet, but we were this morning. It was up to 4,000 this morning. And we got these bad boys expiring the next one. That's next week. So 40.45. We want to see this SPX go up to close above 40.50 next week, next Friday. And then 30th of September, we want to see it being closed above 42.50. We'll see. We'll see what happens. This is what it is. So see the shorter term trades. Got very short term trades, got intermediate trades, and I've got longish trade. Long, it's not that long, but it's longer than doing these super short trades. So I'm not going to put any other trades in today. That was my trade, but I think this was good that I got to kind of show you a little bit of some real live trades and also, mistakes because you're always going to make mistakes in life, especially in trading. That's also how you learn your lessons. See here, that's almost a bullish engulfing candle. If this was slightly lower and it fully engulfed this, that's a trend reversal or a bullish trend reversal. No need for confirmation, right? That's its own confirmation. Oh yeah, is that a floor? It's not a floor. Or oh yeah, where's that opening price? Oh, that's a new floor there. Oops, this is a go back to my price lines. We'll put in that floor right there. All right, there we go. So that is the trades that I put on for the day. Um, there's not, I'm not correcting them. I'm not correcting anything right now. Like I said, these are all out of the money still. These are not safe. The market was looking pretty bullish this morning. Very bullish morning. And then it's taken a big breath. So hopefully this is just a breath, a big breath, um, and not the market failing this bounce off of support. Ideally, don't want to lose money. I'm a big fan of losing money. And then if we are tomorrow, if there are things that I have to do, if there's corrections I have to make on some of these, if some of them fall, then that's something that I'll work on tomorrow. I'll spend the day. Um, we got it falling. We got something else in the money now. What's good about trading the SPX is that you cannot get assigned. They do not assign stock on the SPX. If these were, say, these were all bull put spreads on Tesla, and the trade had fallen in the money, the market maker or the broker can basically can exercise the spread, and you end up assigned. How does that work? It's happened to me before, but it's been so long because I stopped trading those. I stopped trading stocks for that exact reason because I hated getting assigned. Um, I know if it expired on the expiration day, if it closed in between the two strikes, then you're assigned. You'll be assigned for the next day, next trading day. And then I believe if you're deep in the money, if you're in the money under both strikes, I believe you can be assigned. They can do an early assignment and just exercise the contract, and you end up with the stock. So I'll have to double check, don't fact check that. But that anyway, regardless, that's why I like to trade the SPX because it's always cash settled. You'll never be assigned the SPX. You're just gonna be you'll either get your trades or you'll lose your trades, but it's always cash settled, which is very nice. And then you don't have to deal with the headache of getting put stock broken through the floor. Not looking good. See, I shouldn't have entered a trade. This was not once I saw this. This was not an ideal entry. There was no ideal entry, right? I took an entry because I wanted to, because I was hungry and I saw all my trades up, and it just made me, I just see that you see the money sometimes, and you're like, oh yeah, let's go make some more money, and you put on some shitty trades that you wouldn't have done otherwise, and that's not a good way to trade. It's really not a good way to trade. So, you know, the thing about losing money is it sucks, but if it happens, it's your own fault. You get your ass handed to you, it's your own fault because went into a bad trade and you don't know how to correct it or you don't have enough cash on hand to correct it, right? That's the thing. There's corrections. You can do corrections, but it's easier to correct if I've got one contract on, right? Because it takes a lot of money to correct trades. But if I'm sitting here with fucking a gajillion trade, oh, I gotta stop swearing this on you, Danny. Sorry. If I have a, I thought I was doing my YouTube channel for a second. Please edit out the swear words. Thank you. Anyway, so this is real life trading. This is how it's done, and it's not all glory. It's not all glory. You really have to be really on the mark, and especially if you're gonna day trade and you're gonna put a lot of money on the table, you need to be prepared to lose money. You need to be willing to risk and lose all the capital that you put on the table, which is not something I'm prepared to do, which is why I'm saying this was bad position, bad money management skills that I just did, based on hoping and thinking that the market's going to go a certain way, but there's not really. You can't assume that the market's going to go your way because it doesn't care. The market doesn't care what you want. The market only cares what it's going to do. So that's a lesson that just got to keep on focusing on and position size properly. Um, Don't put too much capital on the table. Don't put much more capital than you're willing to risk max loss. If you're not willing to do max loss on certain amount of money, then don't do that trade. So with that, I'm going to sign out for this one. This is a lesson about money management, not getting into bad trades, not putting too much money on the table, and really doing good proper technical analysis because there was no entry. See, it was a downtrend, downtrending, and I took an entry because I saw the money and I wanted the money, and it had nothing to do with having a good position and a good entry. So if I do lose my shirt, and if I'm not able to correct this one big put spread I put on, it is my own fault, and that is the big hits that you can take trading. And that's why really knowing what you're doing before you start trading and really managing your risk properly, and taking courses and courses and courses, right? Like never stop learning because this has the potential to make you great money and to serve you for the rest of your life. However, if you end up blowing up your account in your first year trading and you get too scared to trade again, you're never gonna have the joy and the freedom that comes with being able to make money right off your computer, right? Um, so that's about it for me for today. Thank you again for tuning in. This is another addition to the advanced options, and I may actually also put this on YouTube. So this is also Money Simple. Thanks for tuning in. Check out my website, www.luraycapital.com. Thanks again. Take care.